Afternoon all, thanks for joining us. There's a few more jumping in as we start. We've changed format a little bit now as things have moved over the last couple of weeks, but we have the same roster. So we will work through a few of these things and talk about a few of the issues and then get some updates on key issues as they come through around the new world and JobKeeper and how that's all working through with Maz as well, and funding, which is the big issue going forward. All right, so I'll get into my presentation, which is around the things that people are starting to think about now, which is operating risk and financing risk, which are sort of going hand in hand, but are still, this is the new moving feast, I think. So we've literally been on a teleconference today talking about our firm and how we utilise our office and how we adjust our premises and what sort of percentage of our firm we can get in the office, and how we get there is another issue, but we're still working through that. And looking at the safe work guidelines, because there's obviously a potential risk exposure, which Nick might sort of talk about a bit later, about not making, if we don't get these things right. So we've got to work through that. There's no potential for hot desking in the new regime. And there's also the home office being as a replacement. The thing that I see that could occur is we might end up with more contractors and less employees, but even in particular, professional services, as people don't get full-time roles and move into this sort of contractor roles and be spread across. So that could be an interesting outcome here, and that's probably accelerated that process, which was probably going to happen over the next 10 to 15 years anyway. Private equity, and some of them are on the line, they're looking for right opportunities and getting very active right now. They're looking as being part of a solution to transition rather than being the ultimate owner of some of these assets, but they can add inherent value because they look at things differently and can find funding and take punts on certain things that other banks will not at the moment, because although the banks are open for business, there is an inherent conservatism being built into the way they are doing things. So that is definitely an option that people will be looking for, particularly if they're on an acquisitive approach and they might not have currently the cash or the ability to be able to access cash. That would be part of what I would look at to think about things differently. The other things we're seeing is public transport. Because of the restrictions that are going to be on that, are hubs going to be built up and satellite offices? Some of my clients that I've spoken to are throwing ideas around hubs in Chatswood and hubs down in the Shire and hubs in the Northern Beaches and whatever else, and out west to mitigate some of that risk of people being on public transport. That's hard to see how that will play out, because obviously this public transport risk may decline over time and people might get more comfortable, and that's whether that necessitates the investment, and they've obviously got to get out of their current leases as well, who knows. But the big thing I think that we can see with some of those businesses and those operations where there is some flexibility when work can be done, particularly in things like professional services and other similar businesses, the work day might start earlier and end later, and we may end up with sort of shift work coming through with people being able to get in and use public transports in quieter periods and then be able to get out of the office. So there's some of the things that are being contemplated to work through. Networking, how you present on video apparently is very important these days, because people are really keen on networking, but not necessarily physically meeting at the moment. Although there are some of the transitional things coming through where people wanting to go for lunch in a closed restaurant with 10 people, or go to the pub and sit outside in a restaurant and have a beer. So that's going to be a new thing that'll develop over the next few weeks as well. And then all of that rolled into opportunities for mergers, consolidations, and solidification of businesses, whether that be through making sure their supply chain now works better. And we understand from talking to our clients this morning on our Chinese supply chain catch up that China is back and is running at 100%, but it is really concerned about Europe, and it is really concerned about its supply into Asia Pacific, and terms I suspect might tighten up unless you have a different arrangement. Do you want to flick to the next one, Tanya? So they're all the operating things. The financial sort of aspects of that is to break it down. Be conservative with a 13-week rolling cash flow, because what we see is people now getting the cash coming through, and Maz will be able to tell you around JobKeeper coming along. And JobKeeper is really starting to lift people's spirits because they're seeing cash come in at reasonable levels that they haven't seen for a while. But the problem with that is that we're starting to look to the end of that. And depending on how demand recovers across the economy, JobKeeper might create a bit of a cliff at the end of it when it stops. And the government has said that it may pull it back earlier, depending on how things are going. So everybody needs to be starting to plan to see how that goes through. So what we suggest is you do a 13-week rolling cash flow, gets you into July at the moment, and then try and work out to 30 September and October when the government funding will finish, because the last payment will be in October, I think, Maz, is that right?
Yes, that's right.
Okay.
For September.
For the delay. And
yeah,
then,
so 1 month in accruals.
Yeah.
No.
And then roll out to 31 December, because that will give you a feel about what you're going to look like. And I think that's as far as you can get at the moment. And the other thing we're saying about that is think differently and be open with your supply chain and talk to them and try and work out how business can get done and adapt so that you can bring them along and get them comfortable with what you're doing. So, and then looking at those withdrawal symptoms, how you have a backstop to the government funding and have a plan for the bank and the ATO. So one sort of approach for all of those. It would not be surprising to see a lot of people not pay PAYG at the back end of this for a while and bring up an ATO sort of debt and accumulate an ATO debt. What the ATO approach on that is, we don't know, but people need to be aware of that and try and manage it. And getting on the front foot as well and looking at your sales plans and being able to say, okay, I've washed out a lot of my older client base that I can't deal with or don't want to deal with, and then focusing on building out the other way. And all of that rolls into the ultimate thing at the bottom here, which is be safe and keep the fact that there's legal issues that you're going to have to deal with here on your staffing and also your safety issues, and you're going to have to navigate that and spend some time and effort to work through it. The business that I'd be investing into most at the moment would be the guys doing tape for floors and sneeze guards. They'd be just recruiting out of this world, and anybody who can actually come up with a solution with how these sort of things work and going forward. So there is some ways to plan and get organised for going forward, and just try to break it down into smaller sections. But the practical issues need to come first, so that then you can work that into your finances, I think, and everything needs to be reviewed then, and try and be consistent with what you're telling everybody, so that you don't have to, as one of my mates tells me, you don't have to manage what you're telling each person via a different book, because he is different with the way he deals with his bank from what he tells the ATO. And I haven't got to the bottom of whether he actually tells one the reality or will the other one not. So, and that's going to catch him out eventually, and he's been told 10 times, but that's the way he likes to run his life. He likes to be complicated. It's not my idea. We'll let him deal with that. So in terms of the legal issues, I think, Nick, you're going to jump across a few of those.
Thanks, Todd. I understand that, Todd, you and I are going to be part of, well, 2 test dummies potentially in one of these 10-person gatherings inside a restaurant at some stage in the future. So we might have to report back on face-to-face networking and how it works in practice.
Is that at the start and at the end, or?
Yeah, maybe just the start. Look, those of you that have listened into previous presentations in which I've been involved, I was originally focusing on employee stand down, alternatives to stand down, things like negotiated pay cuts and negotiated reductions in hours of work and alteration in duties. Then we had JobKeeper getting across the payment rules, and also some of these new powers that were made with the JobKeeper legislation around standing down staff, requiring them to take annual leave, things of that nature. I'm not going to deal with those issues today. I'm certainly seeing with my clients that now we're in this sort of building phase. You know, we've got this stage 1 to stage 3 plan. A lot of clients are now focusing on getting back to work, whether that's, you know, in the office or at a work site, actually getting their staff back into work. people are drowning in resources. That's the other thing that I've found. The Prime Minister's coming out, SafeWorks coming out saying, you need to create a COVID-safe plan. My clients are just a bit overwhelmed. What does that actually mean? SafeWorks publishing another resource every day. There's hundreds now. So clients are just drowning in the resources. And the reality is businesses want to get back to doing business. They probably don't have the resources or energy to focus on creating an extremely tailored COVID-safe plan. It will be interesting to see what level of enforcement SafeWork Australia will adopt initially. Obviously, you'll have exceptions like your Newmark houses of the world where there's potentially some negligence there, but clearly when people are being encouraged to go back to work, there's going to be some community transmission going on. SafeWork Australia is essentially the police officer of the work health and safety world, where they can actually come in and prosecute employers. So it'll be interesting to see what sort of approach they take to enforcement. But what we've been doing as a practice group is trying to help organisations come up with a COVID-safe plan and what that actually means. Even if it's some simple policies initially, which might be a working from home policy, a physical distance policy, sanitation, hygiene, cleaning policy, just so the organisations can at least put something in place. So, there's a level of compliance if there's an issue, as well as obviously having a COVID-safe plan if there is transmission. So I might just spend some time looking at some of the considerations with a return to work and perhaps some steps to be taken. Obviously, there are a lot of issues here, and clearly your business plan has to be tailored to the nature of the industry that you're working in and the nature of your workplace. But hopefully you can take out from this some of the issues that you should be looking at. So firstly, just preparing for the transition. How are you proposing to re-engage employees? Who in your workforce is going to be selected to come back to the office? Dealing with reluctant employees that are worried about coming back in, employees that are worried about health and safety risks on public transport. There's obviously physical as well as mental health risks. So I think initially there needs to be a review of obviously the state or territory health directives in your state or territory. At the moment, New South Wales has a public health order, which essentially says that employees should be permitted to work from home if it's reasonably practicable. So at the moment in New South Wales, forcing someone to come back to work where they've been able to work safely at home for the last 2 months is potentially risky. So SafeWork Australia then wants organisations to do risk assessments, looking at your workplace, the nature of the work that your staff are doing, and actually do a risk assessment. There's very good resources on the SafeWork Australia page about how to conduct a risk assessment. And that would include looking at things like potential exposure of employees to clients and suppliers and members of the public, not just co-workers. There's also the mental health risks. So that can be risks arising from employee concerns about contracting COVID-19, as well as things like social isolation and returning to the workplace, or also, employees for a prolonged period of time working from home. Vulnerable employees is a particular issue. We did some advice for a client last week where they had some vulnerable employees. So vulnerable employees at the moment, as far as the guidance being released, are Aboriginal and Torres Strait Islanders over 50 years old with chronic medical conditions, people 65 years or older with chronic medical conditions, people 70 years or older, or people with compromised immune systems. So taking into account in your organisation who is a vulnerable employee and whether special measures need to be implemented. Health and hygiene is obviously a huge issue, minimising the risk of transmission, sharing germs basically. So having a health and a hygiene policy, personal protective equipment depending on the nature of the work that your employees are doing, adjusting or increasing the cleaning practices in the workplace. This idea of hot desking is probably gone out the window for a while. Looking at, touch point cleaning, door handles, kitchen taps, sanitation products, physical distancing in the office. So ensuring that your staff understand what social distancing means and physical distancing in the office. So that would be reconfiguration of the physical workspace, developing plans for returning employees. So that could cover things like rostering, starting, finishing times, as Todd mentioned, numbers of employees, phasing in employees, and having a written, physical distancing policy. Working from home will continue for a long period of time. Organisations now will appreciate that their organisation has probably operated reasonably efficiently, depending on the nature of work, with people working at home. So if organisations haven't looked at policies for working from home, they will absolutely need to, and Safe Work is expecting them to. That can be things like having a working from home checklist, looking at equipment that people are using, potentially funding new equipment, because the home office is the workplace. So whether that means someone's suffering an injury, that can be physical, mental, Safe Work can be involved. Also, if there's an injury, you'll have a workers' compensation claim. The office is anywhere people are doing work, so that includes at home. Training, education is huge. As I said at the start, I think the focus at the moment is employers just trying to get their head around what the new world looks like, and training and education of staff about a COVID-safe workplace is probably not the priority, but eventually it will need to be. Even if that's just communication, what is your building manager saying about returning to work? Like I'm receiving emails from the building manager because I'm one of the directors, but the rest of the staff are not receiving those. So it's my job to distribute those emails to staff so they understand what the new lift arrangements are, getting in and out of the building, the common areas. There was an article in the Herald this morning talking about one of the larger office buildings in the city, and if they had full capacity, which is 2,500 staff, it would take 3 hours to get everyone through the lifts, which just shows the magnitude of what we're dealing with. And the last one that I'll touch on is just having a COVID response plan. So that would cover, and again, the world's changed forever with people coughing and sneezing in the office. So having a new sick leave policy. Don't be anywhere near the office if you're displaying anything that looks like a flu-like or a cold-like symptom. People can work from home or take sick leave. So updating a sick leave policy, but also having a response plan if someone actually contracts COVID-19. Identifying who they've come into contact with, quarantine, self-isolation, cleaning and disinfecting the workplace, things of that nature. So that's really the focus at the moment. There's a lot to take in there. I've been saying to clients, start small. We've developed checklists, FAQs, just so you can start to think about what your workplace issues are and then tailor it from there. So if you need any help in that respect, just reach out. It's a big exercise, but I think you've got to at least turn your mind to it initially. You can't ignore it, because as soon as we start seeing this community transmission or workplace transmission, we're going to start seeing some prosecutions. You don't want to act too late.
And Nick, while you've been talking, 17 minutes ago, it's flashed up on the Herald website. Riverview's had a day student test positive, so they've shut the school.
Yep. And look, the government's, they're saying we need, Australians to get out from under the doona, which is fine. But if there's an issue, no one's going to sue the PM. They're going to sue their employer. So you absolutely need to take steps to ensure that you've got a safe workplace in this new COVID world.
And is it going to change workers' comp structures?
I think it has to. There's a very sad decision that was referred to me recently, which was about a husband who actually murdered his wife while she was working from home, and the children of the family lodged a workers' compensation claim and was successful. And they looked at the pressure put upon this person by virtue of the working arrangements, working at home. So absolutely, I think the workers' comp regime will change. It may need to adapt, But at the moment, you should just assume, and it's always been the case, people are working from home. The home becomes a workplace, and adopt that assumption until such time as there's some legislative change.
Thanks, Nick. We'll move on. And Betty, you want to give us an update on people getting cash out of our wonderful financing parties who've provisioned up to the wazoo for their bad debts coming up?
Oh, sure. Sorry, who are you referring to? Thank you, Todd. Yeah, look, I'm just going to give a brief overview on what the banks are looking for when it comes to funding to SMEs. So just with the few scenarios that we've worked on here. So financials are obviously a key requirement because it is a debt that you are looking to take out. So you actually still need to ensure that you do meet the traditional serviceability requirements that bank asks business to do, or any loan applicants to demonstrate. So 2018, 2019 year-to-dates and forecast P&Ls are required. Businesses need to be operating at a profit to be able to qualify for a loan. So it's irrelevant if you operate at a small loss for tax purposes or whatever. You must operate at a profit so you can demonstrate servicing. How the business was tracking prior to COVID-19 is obviously important as well, and that will also determine your ability to repay the debt. Loan amounts of up to $250,000 are considered, and this is meant to cover operating expenses for the next 3 to 6 months, potentially more. The loan is over a 3-year period, with the first 6 months with the repayments deferred, but then the 2.5 years you do need to amortise the debt to zero. And if you are approved a $250,000 loan, this equates to $8,000 a month in repayments. Interest only extent. So the facility is an asset unsecured loan that's approved, but it still requires personal guarantees. So unsecured when it comes to assets, not personal guarantees. So you must provide personal guarantees. I think that's been a stickler for a few of clients that have hit my desk. The repayments on, so interest only extensions are potentially negotiated, and this obviously depends on the business's strategy moving forward, their strategy around the impacts of COVID on their business and income recovery, and also their strategies around returning to normal when COVID is eventually over. So that's really just a brief highlight on what the $250,000 loan does look like. There were some questions around the JobKeeper payments as well, and how there was a temporary facility that the banks were looking at to fund the JobKeeper while business was waiting for the government funding. So the loan facilities that the banks are offering aren't as, they probably suit smaller businesses, because the maximum amounts are $4,500 per eligible employee, and it is for up to 6 employees only. So the maximum loan amount is actually $27,000, and the interest rate is 7.99%, which is quite high, and it is a 6-month term. So what I've had with the clients that have looked at this JobKeeper temporary funding, they've decided to just use their overdraft that's been funded under the loan of, that they, in this instance, they were approved for $250,000 as it, and they've used a portion of that $250,000 to fund their JobKeeper, and when the government makes the payments, they'll just repay it into their loan. So rather than using the temporary facility for JobKeeper, because it is a bit more expensive. But yeah, so these facilities are available until the 30th of September, until we hear otherwise. But so if you've got any questions, or I'm happy, we're happy, James and I are happy to take any questions if that's the case. But that's really it from me. It's very brief.
Thanks, Betty. The other thing, I think the other thing with that is that there is a lot of people exploring getting these facilities and using them different ways. Like some people are rolling them over out of their existing facilities and using them as a temporary sort of build up. but the issue I see at the back end of that is that repayment window, and that's going to put pressure on. So there's getting breath into the economy now. Everybody just needs to make the most of that while they can, but then be able to plan for the repayment of it.
Exactly. So, and that's where you really, if you are approved and you do have this 6-month deferral, and if you do want to extend the interest-only repayments, you probably can be considered. You just need to make sure that you've got, your strategies and your story to tell the bank as to why you would like an extension, or what what your plans are. I know a lot of the relationship managers that I've spoken to, or one in particular, has said to me that even though the price of this product is incredibly attractive, it's a 4.5% interest rate with no establishment fee. The pricing is good, but the repayment terms are so stringent that it's a bit hard for business potentially to be able to make them. So a lot of the banks are even talking to business about their existing portfolios and existing facilities, and potentially working with their existing security. And so, yeah,
so restructuring their existing facilities to get a better overall outcome, rather than just throwing them all into this thing.
Exactly, because that's exactly right. So just restructuring everything, or potentially taking advantage of it for the short term because it is such a good product, but then having a plan as to how we're going to roll it into a traditional loan of some sort, so that you can have it for the longer term potentially.
Sounds good. And then thinking about how that works on a director financing basis as well, because there's obviously people putting money in via this thing and it's washing around. But all of these things need to be thought about now rather than when things get worse, hopefully.
That's right. Yeah.
All right.
Todd.
Thanks, Betty. To the Queen of JobKeeper, Maz, do you want to provide an update and give us some feedback?
Yeah. No, thank you. Where are we? I mean, I guess we're here on this webinar. That wasn't a logical question, was it? With JobKeeper, nothing really new has come out. If you look at it, I think towards the end, hence why we didn't necessarily hold a webinar last week, not just because of JobKeeper, but to see if there's new things. There's probably more information out there now on the ATO website and Treasury, and it's a bit more concise now. Because remember, when we were getting all this, it was all coming in daily. As I'm sure with the employment law, it was all changing daily. But now it's a little bit more settled. And a lot of people already have enrolled if they were met the criteria, because you could meet it in March, you could meet it in April, or you could meet it in April to June. And if you didn't meet it under the basic test, you could look at the alternative test. And they gave a few more commissioners' discretions for certain types of entities, and the service entity was the last one that came through. Now, I'm not talking about not-for-profits here, I'm just talking about for-profits. So in some ways, they've brought out everything they're going to bring out. What you probably have been hearing in the news is the government is going to wind it back. I think it's a little bit early to say that. The reason it's 6 months is we don't know where all this is heading. It all looks fantastic, but when we all go back into work, it could have a nosedive, if you like. More people could get the virus, and then the government tells us all to start working from home again. So, I don't think we should all be rejoicing straight away, but at the same time, I don't foresee them taking away the JobKeeper. If anything, I think maybe in 1 July or after June, they may reduce the amount. So at the moment it's $1,500 a fortnight. Potentially they could reduce it. But it's all hearsay at the moment. It is still here, and we went through a lot of trouble, everyone, to get it, as in to make sure we qualify. So, it'd be a bit short-sighted of them to take it away straight away. For those that on the call who have not been attending, really the main thing to be considering is, are you still eligible employer? Now, if you've already determined all this, you don't need to go back and determine it. You'll still have compliance issues to do on a monthly basis, but you're in, one in, all in. But otherwise, if you haven't really qualified yet, there's still an opportunity to qualify. And always think about it, looking at it different ways. So you look at your decline in your turnover or projected turnover, depending which month you're looking at. If you're looking at May, we're sort of towards the end of May. So you could probably do a few projections there. And how does it compare to last month? you've already determined, I would have thought, that April to June you didn't qualify, so hence why you're looking at it monthly. There's still an opportunity if you don't meet May or June months, you could meet the quarter of July to September. So there is still people or organisations out that maybe haven't felt to the repercussions of COVID in March and April, like the restaurants where they just shut down. So that was quite an easy one, whereas they're going to start feeling it. And a lot of clients have sort of said those that haven't already enrolled, they're probably going to start feeling it in June, July. So going down the track then, if you are in that June, July or May period when you're going to qualify, is you've got to keep in mind that you've still got to enrol. So once you determine which month you think you're going to meet it based on your projections, you need to enrol. You need to determine who you're going to be eligible employees, meaning they still have to start from 1 March, being employed 1 March. Any new employees after that, forget it. They have to be Australian residents, you know, over the age of 16, etc. So those things that you would have seen as qualifications. The biggest one there was obviously the casual staff. They had to be at least with you for 12 months before 1 March 2020. And the question was, what's regular and systematic employment? You know, did they have shift works like a waitress or waiter? Were they on catering on certain dates or rosters? So things like that to consider. But in most cases, it'll be quite clear cut who your employees and whether they're eligible. And, you know, you'll have to effectively send those nomination forms out. It is self-assessment, all of this. So meaning it's only if the ATO audit you and they look at your numbers and say, well, you enrolled to JobKeeper, but you don't deserve it, or you got it wrong, then you would have to pay back the ATO, and you'll have to pay that with interest and penalties if they feel that you've contravened or you've done something on purpose. Now, if you haven't done it on purpose, you've made some projections and your projections have been skewered, maybe they're 5% difference, you know, they didn't quite meet the 30 mark, they maybe met 25, 27. Well, I don't know what's going to happen, but the ATO said, has said in a lot of their documentation that obviously if it's only a marginal error, they're not going to necessarily ask you to pay it back, and you still may be entitled to JobKeeper, but you need to document. Whatever you do, document. Even on the employment side, if you choose not to include a certain employee, document why that is. Maybe it's a nomination form that tells you that they nominated someone else. So all these things are quite important to keep, just like any records for tax. Eligible business participants, that is when you're basically not getting salary and wages and you're an owner of a business. So you're effectively carrying on a company, you don't get salary and wages, but you get directors or you get a dividend. So that's what that's about. So there's opportunities there for business owners to get something where they're not being paid salary and wages. They get JobKeeper. Use the single touch payroll. That is really where most of it, how they're going to define who employees are entitled and how they're going to base their payment on, is the single touch payroll. If it's upgraded for JobKeeper, is the simplest form. As I've indicated before, it's quite simple to enrol. You enrol, and then once you've enrolled, it goes further to ask you, the next step is to say, all right, how many employees are going to be on the JobKeeper? And if you've already got single touch payroll, it's already linked, but you just have to put the numbers in and they just coincide, and you make sure your bank details are correct. So it is quite simple to get it really wrong, but on a monthly basis, you'll also have to identify what your actual revenue was for April and what your projected is for May. And you do that every month. So in June, 7 days after month end of May, in June, you're going to have to do what was the income for May and then your projection. And that's only if you're in JobKeeper. So once you're in JobKeeper, you have to do that monthly. So if you start JobKeeper in May, then you only have to do it for May onwards. You don't get anything for April. If you start in June, that's when you start getting JobKeeper. When do you get paid? You get paid you get a month in arrears. So you get paid the first week of July for June. So just keep it thinking that way, that you're not getting your money up front really. Whenever you enroll, you're always going to get it a month in arrears, and you're going to get it 7 days after the month that you enroll. what do you have to make sure you do before you do the enrolment is do the nomination forms and make sure you've paid a minimum of $1,500. Whether the employee is stood down, useless, not doing anything, but still employed with you, it's $1,500, whichever way you look at it. I probably can't say that word, can I? If we go to the next slide, please. I'll just whip through some of these other slides. Calculating the decline in turnover, I found this is probably the area that most people have found it interesting, if you like. In some cases, it's a straightforward calculation, month to month. You look at, in most businesses, especially your businesses, you're going to look at month of March and month of March 2019, compare it. Has it been a drop of more than 30% or 50%, depending if you're foreign owned? A lot of the foreign owns, not all of them, can have global incomes of over $1 billion. Not all of them, as I say, but you know, you'd have to have a 50% drop or more, which is not as likely. You have to look at it from, when you're looking at the projected turnovers, whether you're doing it monthly or quarterly, you've got to look at what is your taxable supplies, what is GST free, you include all those. If you're a member of a GST group, you just look at the entity itself that has the PAYG withholding. If you're calculating, how do you calculate your decline? I mean, there's many ways to calculate it, and I think the this law companion ruling that the ATO has brought out is probably more confusing than helpful, but it is helpful, if I can say that. But I think it's more helpful for people that understand GST than for those that don't understand GST. So if you look at business owners that probably haven't had experience with GST, when you start talking about taxable supplies and when a supply being given and looking at all the methodologies, which I'll go through in a minute, can be very confusing. So seek advice if that is the case. Sorry about that, just somebody calling. So when you, whatever method you end up choosing, however method you end up choosing, and I'll go through what I mean by that in a minute. And when I say methods, I mean just under the basic test. How do you say what is your income for that particular month? And I'll go through that. But whatever method you choose, you must use the same method when you're reporting your monthly calculations to the ATO. So as I mentioned before, you have to report what you actually received and what you project it to be after you've enrolled. And you do that every month, and you do it on the same basis. So when you're calculating your GST turnover, there's modifications to it. So you might look at, there's no GST included in the amounts for your sales, no input tax, meaning no interest, dividends and rentals, so no passive. So it doesn't really help maybe those fund managers, those big fund managers, which will have just interest or dividends, revenue. Commercial rents are probably okay because they're taxable supplies. It's just residential is input taxed. You calculate on the entity itself, as I mentioned, even though you might be part of a bigger group, a GST group or consolidated. And if you're a charity, they exclude and include certain things. So I'm not going to go through that in this session, but you need to be aware of that. If I can just go to the next slide, please. So what I wanted just to discuss was the decline in turnover. And it can get a little confusing, so I just want to reinforce it that you've got the basic test and then you have an alternative test, which is the Commissioner's discretion. So this is where you've had a new business or you've had an increase in income over the last year because you've added new businesses to your current business, or you might have irregular income, or you might have had bushfire appeal issues, bushfire issues and exemptions given. That is kind of the alternative test from a Commissioner's discretion, if you like. But under the basic test, there's this law companion ruling which says it wants to help you calculate how to work out your declining turnover. Now, in some cases, in the beginning of all this, we've said, oh, well, let's just go to your BAS, get your G1, take out your GST, take out your input tax, add on your GST free, and compare that to the month before, the month in the same year as the year before, I should say, March to March, and do we get a decline of 30% or more? Bang, yes. Okay, we don't need to go any further. Simple as that. For some cases, you don't need to worry about it. There's a lot of businesses out there which might be just under the basic test, and I found this more for not-for-profits, but it can be for certain other types of businesses where you receive lump sum monies to do things. So if you receive a lump sum money in January to provide services for 6 months, you know, do you spread that, which is called a grant, do you spread that or not? And maybe it's a construction contract that you have, or you might be in engineering and you have massive projects. So what do you follow? Do you follow what you put in your business activity statement, or do you follow another methodology? And so what this ruling, it tries to identify, it just goes through those steps. So it tries to say what supplies are relevant when calculating GST turnover, as we already discussed. You know, you take out the GST, etc. And then B and C is, how do you allocate your supplies and how to determine the value of the supply? Now, these two, I'm not going to go into them, but that's a strict definition. I say strict definition of when your supplies are made. It doesn't necessarily relate to what is in your business activity statement or how you provide it under your accounting methodology. So what the ATO has said that they call that the strict definition. And that may help some people with their calculations. So that's why, you know, it's there, but it's complicated. It's about timing and, you know, it can be very fiddly. So not recommended necessarily. I think you have to go to the experts if you're applying step B and C. But what the ATO recognises is the ATO compliance approach. And here's where they've said in this ruling where you can use your accounting methodology. So if you account for it in a certain way, say per your financial accounts, if you spread a lump sum amount that you receive, you can use that as when you're looking at your comparative months. So in February I received $20 million. I didn't really, but that relates to 3 years or something like that. I'm just giving you a really exaggerated example. You spread that over 3 years. So for the month of March, I only include a very small portion of that. And then I do the same when I'm comparing March in 2019. So that's what that accruals accounting looks at. With the GST attribution, it looks at when you've received it and when you've included it in your business activity statement. And that is the approach that a lot of people have used. So when you're applying this, it refers to in the ruling good faith. Now, the ATO has said, you know, as long as you're applying all these things in good faith. Well, what does good faith mean? They don't define it. I guess it takes its ordinary meaning, and it means you're not doing something in contravention of the law. So one thing there is another ruling. There's ruling for everything, which looks at schemes. So are you entering into some arrangement to reduce your income? So by deferring invoices, no, by doing things that, you know, will alter your income, which you wouldn't ordinarily done. And that's not using one of these methods. That's just doing how you've done your business. And again, it's done because you want to reduce your income to get the JobKeeper. So that's why it's important to just understand, you know, why you're doing it and document exactly why you're doing what you're doing. And you can use any of these methods. So the strict approach, the accruals, or the GST attribution in your monthly or quarterly. Don't get confused about it. I mean, if you used your BAS and you've already done your calculation, that's fine. The ATO has said in this that if you've already used an approach, don't go and change it. This was there just to help those businesses that were having problems calculating it. And they may not have met the alternative Commissioner's discretion test for whatever reason. So I just wanted to ask a poll question, whether it's, you know, do you need assistance in calculating your decline in turnover? Do you think that maybe one of these other methods might assist you? So if you just have a look at that and answer that, and I'll move on to the next slide when Tanya's ready.
Because, Maz, the other factor with being eligible for JobKeeper is that forms part of the eligibility for the code for the landlord discounting as well, and the turnover, it forms part of that as well. So the government has used the same mechanisms that they've built into JobKeeper for the landlord discount and your rent discount. So you need to be very clear around how you're doing all of that, because you're going to have to provide it probably to a landlord to justify it anyway. Yeah,
and I think the code is only for turnover under 50 million. Whereas, you know, with the JobKeeper, your turnover can be under $1 billion. So there are some differences, if you like, but at the same time, yeah, I think that's right. I think it's important. If you met JobKeeper, there might be some other, and also under the Fair Work Act, you know, if you're in JobKeeper, there might be some concessions. Is that right, Nick, to say that way, put it that way? In the sense of some concessions of how you
Yeah,
your
absolutely.
employees.
So those special temporary powers enabling you to stand down people, change their duties, direct them to take annual leave, they are only applicable to those employers participating in JobKeeper with respect to their JobKeeper employees.
Yeah, so there's a sort of a bit more of a concession if you sit under JobKeeper. So if you're not under JobKeeper and you're slashing people and doing things that might be inappropriate, you know, under the normal legislation. So that's why, you know, fitting under this can have a few advantages. Tanya, do you mind just taking off that? Do I do that, or is it? Oh yeah, okay, thank you. Calculating the client turnover. So as I was saying, the alternative tests, you know, so if you don't meet the basic under all those different options, so the strict, the accruals, and the BAS, business activity statements, I'm simplifying, but any of those three methods for any of the months or any of the quarters, then the other way to look at it is go, okay, well, what about the commissioner's discretion, his alternative test? So do you need to go and seek his discretion? The answer is no. But if we go to the next slide, it doesn't apply to everyone. It only applies in certain circumstances. So Tanya, just the next slide, thank you. So the circumstances here are quite specific, right? So commenced your business, acquisitions and disposals, but it's acquisitions and disposals are part of your business, not all of your business. Restructure of your business. So what does restructure look like? Well, maybe in 100% consolidated and you mix things around, or maybe you're owned by each other, but you know, majority owned, but you move it around, question marks. Substantial increase in turnover. So you had a product, you've put extra products in, so you've had a really big growth, so a comparison would never work. Irregular turnover. You're not a cyclical business, but you've got irregularity in your turnover. Sole trader or partnership. One of the partners, maybe you were sick and injury, maybe you're on leave, maternity leave, all those kind of considerations, and drought. And then they came out with, so that was the first change in the second part of the legislation, but then they brought out the service entities. So a lot of people work under tax consolidated groups, maybe the GST groups, and they have a service entity that employs all their employees. And then you need to look at the turnover for those connected entities, and has they decreased by 30% or more. So that's again something to consider if you're not already in the JobKeeper. So if I go to the next slide. So I guess it's call to action. I really just want to hear about what your questions are, if you have any questions. But you know, we've been assisting clients to be eligible for it. I think there's still opportunity. It has died down this week. I was in heaven because I was able to do my other work. But you know, it was a big how can I say, pressure on a lot of employers to get it right and to have it, you know, enroll in the right timing. Assisting with calculation, your projected turnover, you can see that can get quite confusing, but is there a way that you haven't thought about to calculate it that potentially you're entitled to? And I guess once you meet it, it's about making sure you enroll. You can still enroll for 31 May, but you would have had to top up your staff by 8th of May. This probably is relevant for those that maybe topped up, maybe they're waiting for some information and they're not going to enroll until 31 May. It just means in their case, they're still entitled to the April and May, and they'll probably be paid on the 1st of June, like in that first week of June, or 14 days between then. But if you've already put your enrolment in and you've already filled out the report, talking about your income and everything, you should have already got your JobKeeper, or you should be entitled to get it already. I've seen a lot of employers already getting it. So I think that really has eased the financial burden, because the cash boost has come in, and also the JobKeeper. So if you're entitled to cash boost and you haven't got it yet and you haven't lodged your BAS, because that's the trigger of it, then I'd be inquiring about that. Keep records, important to keep records, 5 years. Keep top up, keep paying the top up payment. So it's got to be every month, not just the April. When you're entitled to it, it's got to be paid every quarter or every fortnight, or whatever your pay run is. Like if your pay run is every fortnight, you top it up in the fortnight. it does work out quite neatly if you keep topping it up in the fortnight. You might miss the fortnight because, you know, your pay is on the 13th instead of the 10th. It still probably relates to that fortnight of the 10th. But it's a bit controversial. So long as you've paid them within that month, you should be able to be entitled to the JobKeeper.
Just to butt in there, Mariana, there is actually a Qantas decision before the Fair Work Commission about that entirely, which is where Qantas paid someone the equivalent of the $3,000 over the month, but there was less than $1,500 in one fortnight. And the employees lodged a dispute with the Fair Work Commission. Qantas tried to boot it out of the commission on a jurisdictional ground, which went all the way to the full bench of the Fair Work Commission, and that was dismissed. So we haven't actually heard the merits claim yet on this idea about the month versus the fortnight. So I guess.
Oh, right. Okay. I think they need to have paid $3,250 in the month. They need to have averaged it out, because you don't have 2 fortnights in a month. You have more than that, and that's why I think if you pay on a monthly basis, I think in order to get it right and be entitled to it, you should be paying the spread, if you like, the 3,250, whatever the number is.
Yes.
And it's $1,500 a fortnight. And I say that because in most cases, a lot of employers are fortnightly. So there was 3 fortnights in April itself. So I know it gets a bit technical here, but and we've had a lot of discussions with the ATO about this. So the first, obviously they might have been paid on the 8th of May, but the one that relates to the first fortnight, you allocate it there when you're doing your STP. Then the payment that relates to the second fortnight is fine. Then the third fortnight in April relates to the first fortnight of May, effectively. So if you look at the timing, when your pay falls into it. Now, that's because most are weekly and fortnightly. But if you're monthly, then technically I agree you would have to pay them $3,250 to have paid them, you know, the right amount. Although it's not absolutely clear, because the ATO has a little paragraph in their website that says, you know, they put it in, appropriate it to the right month, the right fortnight. So it's almost saying like you might pay it in a month, but you allocate it into the fortnight it relates to. I don't know how you go doing that with STP. So yes, you're right. It can be confusing. So it'll be interesting the outcome of that case.
Yeah, look, I'll update when it comes through.
That'll almost be as interesting as how the referees go, Nick, as well.
Yes, correct. 8 days, mate, for footy.
Before we get into that desert island, Maz, there's a question for you from Salil. Was cash boost for each paying entity in a group, or was it done on a grouped basis?
No, the cash boost was each entity, just like JobKeeper. JobKeeper is on each entity.
Okay.
Did you get it for? I wonder if they got it for each entity. But you obviously have to have PAYG withholding for each entity. You know.
Yeah.
No,
Salil didn't get it, so you might need to have a chat.
Yeah, that's interesting. Okay. Have you lodged your BAS? And maybe you haven't got it yet, because I know some are just getting it this week. So there's a few questions there. Okay. Happy to talk though.
All right. Unless we have any more questions, we might move on. But yeah, I think JobKeeper is now the second round of JobKeeper. So Salil's just come back with another update. Only got for the group on an auto basis. BAS is lodged for one entity, it seems like. But yeah, Mariana, I think you might take that offline.
Yeah. I'll certainly give you a call.
Yeah, and I think so. The JobKeeper, the subsequent things with that is obviously I'm seeing it now with the landlord negotiations and the eligibility underneath that, and how that plays out, because that's obviously impacting how people are returning as well, particularly with things that were mandated closed by the government. So they're trying to understand how that works, and there will be a bit of an issue, I suspect, going forward with retail landlords trying to get some deal longer term, which who knows what that's going to look like, whether that's going to be a long-term turnover position or whether they're going to be stuck in this, in resetting everything gradually over the next 18 months, because like offices, I think retail is going to go through some sort of reasonable change where the really good businesses will adapt and keep going, and those which are not as agile or subject to existing issues will probably struggle, and they may well be the ones that we'll continue to see fall over. And that's just going to logically happen. I don't think demand's going to pick up as quickly as what everybody thinks, because people are just holding on to cash fairly well, but they will buy bargains and things that they really want. So there's going to be a balance in that sort of area. Unless we've got any more questions. Do you have any more statements, Nick? Do you have what's going to happen this week?
No more statements. Oh, look, the claims are up 60% apparently. Unfair dismissal claims are up 60% in April this year compared to April last year. So there's lots of activity. There's lots of unhappy staff or ex-staff. So I just expect more and more guidance from the Commission, but I just don't think the Commission have the resources to deal with these matters quickly. Like I had a mediation yesterday for a Fair Work Commission matter that was lodged about 10 months ago. So there's a big lag of claims.
And that's going to be the same thing with Safe Work. I would have thought their resourcing is not material.
I just don't think it would be a sensible decision for Safe Work to come out with a huge bat for employers that are genuinely trying to create safe workplaces. I think there'll be a real reluctance to do that, but who knows? But
they will cherry pick out ones who they think are not doing the right.
Yeah, the obvious ones, and maybe they'll wait before they really start the sort of enforcement agenda.
Yeah,
which means there might be a bit of leeway initially, but definitely need to start taking steps to get ready for the return.
Yeah, and Mariana Chamil's asked a question around the 10,000 grand in Victoria. We've been dealing with those, haven't we?
Yeah, we've been handing out money. We've been handing out money. Yeah, there's one in for New South Wales. So I think, Shamil, you'd probably go for the New South Wales unless you're in Melbourne. But yeah, they're quite easy. I mean, I think if you just go to the website, and you might need an accountant's letter, but that's pretty straightforward. So long as you meet the criteria, which I think is you had to have a drop. In New South Wales, it's more than 75% drop in income, and you had to have 1 to 19 employees and over 75,000 in income. That was the criteria. So it was really made for those businesses that felt the pinch, if you like.
Yep. So the ones that stopped straight away, effectively.
Yeah. I mean, I think what's to come, if you ask me what's to come from a tax perspective, I think we're all settled back into, where the focus for some businesses off the JobKeeper, but I think the ATO is going to start reviewing some claims.
And FBT's due now, isn't it? FBT's now.
Yeah, we've pushed. They've pushed them out to the 25th of June. The FBT. Mm-hmm. We already had that lodgement date, so it didn't really make too much difference for practitioners. But if you weren't with a tax agent, and tax returns, those that may have been with tax agents that might have been due, 31st of March or other dates, they've pushed that out to 5th of June as well. So that's been great because I think people just not been able to focus on those things when they've got no business or very reduced business to start, that they're not focusing on doing their tax returns. Also payments, we've been able to reduce the POIJ instalments, company tax, to 0 in some cases. It only defers it because if you end up making profits, you'll have to pay that in tax later, but there won't be penalties or interest. So there are things that we can do there that I think could be beneficial to businesses to save a bit of money.
And the GST is the other one, is that just getting approval to just remit on cash basis rather than accrual, so that if you do have a build-up of debtors, you're not paying the GST out now, you're only paying what you are receiving, which is effectively a deferral, but it's not the same as deferring a liability. You're only deferring it, so when you receive it, you pay it, so you're not paying in advance.
Yeah, the other reason why you might change it to monthly is you might be on a refund, so you might be a builder or something, and you're you know, you're doing quarterly and you're getting a refund quarterly, but you want to convert to monthly so you can get it more monthly.
Quicker. Yep.
Yeah.
Okay. Unless there's any other comments or queries, and you're more than welcome to get in touch if you have anything. We'll call it a day.
Thank
Okay.
you.
Thank
All right.
you.
Thanks to all. Be safe.